Appealing fictions, and why stories are more powerful than statistics. The more you want something to be true, the more likely you are to believe a story that overestimates the odds of it being true. The people were more addicted to prophecies and astrological conjurations, dreams, and old wives' tales than ever they were before or since. Almanacs frighted them terribly. The posts of houses and corners of streets were plastered over with doctors' bills and papers of ignorant fellows, quacking and inviting the people to come to them for remedies, which was generally said of with such flourishes as these: infallible preventive pills against the plague, never-failing preservatives against the infection, sovereign cordials against the corruption of the air. The plague killed 1/4 of Londoners in 18 months. You'll believe just about anything when the stakes are that high. Now think about how the same set of limited information and high stakes impact our financial decisions. Why do people listen to TV investment commentary that has little track record of success? Partly because the stakes are so high in investing. Get a few stock picks right and you can become rich without much effort. If there's a 1% chance that someone's prediction will come true, and it coming true will change your life, it's not crazy to pay attention, just in case. And there are so many financial opinions that once you pick a strategy or side, you become invested in them both, financially and mentally. If you want a certain stock to rise tenfold, that's your tribe. If you think a certain economic policy will spark hyperinflation, that's your side. These may be low probability bets. The problem is that viewers can't, or don't, calibrate low odds, like a 1% chance. Many default to a firm belief that what they want to be true is unequivocally true. But they're only doing that because the possibility of a huge outcome exists. Investing is one of the only fields that offers daily opportunities for extreme rewards. People believe in financial quackery in a way they never would for, say, weather quackery, because the rewards for correctly predicting what the stock market will do next week are in a different universe than the rewards for predicting whether it will be sunny or rainy next week. The bigger the gap between what you want to be true and what you need to be true to have an acceptable outcome, the more you are protecting yourself from falling victim to an appealing financial fiction. When thinking about room for error in a forecast, it is tempting to think that potential outcomes range from you being just right enough to you being very, very right. But the biggest risk is that you want something to be true so badly that the range of your forecast isn't even in the same ballpark as reality. It's hard for a policymaker to predict an outright recession, because a recession will make their careers complicated. So even worst-case projections rarely expect anything worse than just slowish growth. It's an appealing fiction, and it's easy to believe because expecting anything worse is too painful to consider. Policymakers are easy targets for criticism, but all of us do this to some extent. And we do it in both directions. If you think a recession is coming and you cash out your stocks in anticipation, your view of the economy is suddenly going to be warped by what you want to happen. Every blip, every anecdote, will look like a sign that doom has arrived, maybe not because it has, but because you want it to. Incentives are a powerful motivator, and we should always remember how they influence our own financial goals and outlooks. It can't be overstated, There is no greater force in finance than room for error. And the higher the stakes, the wider it should be. Everyone has an incomplete view of the world. But we form a complete narrative to fill in the gaps. Carl Richards writes, "Risk is what's left over when you think you've thought of everything." Psychologist Philip Tetlock once wrote, "We need to believe we live in a predictable, controllable world. So we turn to authoritative-sounding people who promise to satisfy that need." Satisfying that need is a great way to put it. Wanting to believe we are in control is an emotional itch that needs to be scratched, rather than an analytical problem to be calculated and solved. The illusion of control is more persuasive than the reality of uncertainty. So we cling to stories about outcomes being in our control.